In late February, the Middle East conflict escalated considerably, sending a fuel crisis rippling through Europe. According to CNBC, Middle East refineries provide Europe with around 75% of Europe's jet fuel. Jet fuel prices have since absolutely skyrocketed. Lufthansa cut 20,000 short-haul flights through October. And to quote Fortune, Europe is weeks away from crossing a critical threshold that represents a severe and immediate shortage of jet fuel. So how are European hoteliers responding? Here is what we did. We pulled Lighthouse hotel pricing data from Q3 2026 as of 3 different points in time. 1, the week of February 18th, before the conflict escalated. 2, the week of March 11th, when the fuel crisis was in its more preliminary stages. And 3, the week of April 29th, after the International Energy Agency issued a grave warning that Europe had maybe 6 weeks or so of remaining jet fuel. We selected 17 destinations to look at that spanned 3 categories. Coastal leisure markets that can be reached by car or some combination of flying and driving, leisure islands you have to fly to, and big international cities most guests fly to. Let's look at this first chart, which includes 10 of the markets we looked at. You'll see 2 bars per destination, with both bars tracking the advertised Q3 hotel pricing change from the week of February 18th, pre-conflict, to April 29th with a full-blown crisis. The teal bars are 2025, showing how Q3 hotel prices grew last year from February 18th through April 29th, and the orange is 2026 amidst the fuel crisis. In 2025, every destination raised Q3 prices steadily over that time window. Mallorca was up 18%, Marbella and Malaga up 14%. Normal seasonal pattern. In 2026, the pattern broke. And now I'm going to add one more detail to the slide. I'm adding what we call the crisis gap, which is the difference between how hotels performed in 2025 versus what they did in 2026. Marbella experienced a 15.1 percentage point swing, Malaga a 14.7 percentage point swing, Mallorca a 13.8 percentage point swing. I mentioned we identified 17 markets to look at. These are the 10 with the largest crisis gaps. The bottom line is this: the fuel crisis erased Europe's normal summer pricing ramp up. Now, let's look at the crisis impact by destination type. We've separated our locations into 3 types and indexed their price differences to their pre-crisis baseline. First group is coastal leisure, which includes Marbella, Malaga, and Algarve. Then we have islands, which are air-only destinations like Reykjavik and Ibiza. Lastly, we have metros, which includes big international cities like Vienna, Milan, and Amsterdam. The dashed lines are 2025's normal price ramp-ups over this time period, and the solid lines are 2026 that are impacted by the fuel crisis. And here are the average growth rates from the February to the April dates. In 2025, every category ramped up notably. Coastal leisure up 12%, islands up 11.1%, metros plus 5.2%. In 2026, the picture inverts. Coastal leisure and island barely show positive growth, and metros actually show negative 2.1% growth. The takeaway from these averages is that the impact is universal. Each of the categories broke pattern, so make sure you know your source market exposure. If a significant share of your guests fly in, for example, from the UK or Scandinavia, you may be more vulnerable than you realize. Identify which feeder markets are most flight dependent and stress test what a 20 to 30% reduction in those arrivals does to your occupancy. Also, if you're a coastal leisure property, drive to demand is your hedge. Go after it. If you're in Malaga or Marbella or Algarve, there's an opportunity to lean into more local Spanish, Portuguese, and Southern French demand through targeted marketing and packaging. That audience doesn't necessarily need a plane. Don't wait for them to find you. Lastly, don't just wait for your booking curve to tell you what the fuel data has already told us. Get ahead of it. Review your Q3 rate strategy against realistic demand scenarios, not last year's comp. Thank you, as always, for tuning into the Spotlight podcast. My name is Blake Reiter. As always, we will be back next week with another Lighthouse Quick Take.